All right, I think we're ready to start. Hey guys, welcome everybody. Quick sound check, mic check. Hey John, hey Christopher, how you guys doing? Okay, let's get started, guys. Welcome to the trading room. My name is Saul, glad to be with you. Before we get started, please remember we're gonna be trading live market conditions, so anything I show here or I do here is not meant to be a buy or sell signal. On any instrument, on any asset, you need to be responsible for your own trading. I want to show you concepts that you can go and apply on your own situation and strategies. I might jump to lower time frames just to show you full setups from reading and analyzing to executing, managing, and exiting, both on losses and wins. So be responsible for your own trading. Also remember there's some latency between what I broadcast and what you receive. So that's it. Let's start. Welcome guys, good to see you. Andrew, Enrique, welcome guys. So let me go to I need to share my screen here. So I quickly jump to the dailies because what's been stocked on this range. Okay, we created what it's this candle, the white candle has been the range of this sideways movement on a daily chart. So we've been for 1, 2, 3, 4, 5, 6, almost a week of trading activity stock in that range. Now, of course, the daily range, so it's a 150 pips range, but it's considered a consolidation. Okay, similar to what we had maybe here. Okay, it's a sideways movement. So when is that ending? I have no idea. But what we do know is usually those ranges on the dailies tend to break hard to either direction. Okay, and usually those breaks or those breakouts come after or just prior a large news announcement. Okay, it tends to be fundamental break. So we have arguments to say this going, just technical speaking. Okay, we arguments to say we're going to break to the lows, and we have arguments to say we are going to break to the highs. Technically speaking, we're still in a downtrend, so this might be a pivot point, and we might see a retest of the lows or previous lows, or at least make a little push before we make our next movement, probably to the upside. Fundamentally, there's a lot of reasons why the parity level should hold, and there should be a lot of interest on that level holding, and we should start seeing a bullish trend or the beginning of a bullish trend on this pair, on the Euro USD. We discussed the fundamental last week, so go check recording from previous week, and we discussed the inflation and the debt and interest rates increasing and all the implications of a very strong dollar, both for US economy and world economy, etc. So when I go to a lower time frame, so this analysis don't help me on my bias for my long-term trading, okay? Because I have an argument to go both directions. So I want to get a bit more detail on how bullish movements are being formed and how bearish movements have been formed. So you can see the difference between this, bullish movement, which is similar to this down movement, but except of those, all other movements have been very, weaker. So again, mixed signals, not very clear to what direction I want to call. But if I go to lower time frames again, after a sell-off like that, we tend to see Okay, it's very uncommon, might be the case, but it's very, very uncommon to see it just go straight up. Might happen. I'm not saying it won't, but usually the movement to the upside tends to come with some movement to the downside. So even if it's going to jump up, we will see, or we should see, some movement like that, okay, or sideways movement, and then like that, and then on this area maybe a little bit of reaction, and okay, like that. So similar to this movement down, okay, we had push, sideways movement, push, sideways movement, push. So the up movement should be the same. So my my very next trade right now needs to be trying to catch the next movement to the downside. Okay. Now I'm at a resistance level. Okay, so I want to see if that movement to the downside will happen now. But if I see these levels start breaking, then probably my short-term bias will switch into the bullish side, and then when I do get that movement to the downside, I will start building longs. Okay, so let's see how do we react. Now we just had a lot of volatility. Okay, just before we started, there was a very large volatility movement down here, trying to go down and reject it to the upside. So I expect a little bit of continuation to the upside. So once I see a pullback on this level, I must start building long positions. Okay. Let me change this points, and I want to go with this too. And let's see how that forms. Okay, so we're at the resistance. If that breaks, it might go all the way to this area, and that's a large range. That's a long run, 18 pips. So if that breaks to the upside, I need to find ways to close my sell or to fix it and start building longs. Until then, let's see how price behaves a little bit. So the 1 minute chart is very, this last movement was kind of messed up a little bit the price action. So I'm not sure where to take profits on that trade. Let's see if we can have a little push. Now, real time is very hard to know where is this going, okay? Because this movement might also start going sideways, and this might create a range here. So my take profits could be there, and my stop there. That would be a great trade, and it's a realistic trade. Just not sure where did we stop. Why did we stop there? Okay, there was support. We attempted to break the support, and then we reacted. I think we might try to retest that support. I really don't know. And price action on the 1 minute chart is not very clear. Just wait a little bit. Joe, so whenever drops enormously like Euro USD have done for quite some time, who is taking the other side? Who is buying? So when you selling Euro at the very same moment on every transaction, you are buying dollar. Okay, the the Forex market is it always goes in pairs. So you're selling Euro and in return of dollars. Okay, you're selling euros for dollars. So someone in the world, okay, you're connected to the interbank, and so someone is willing to sell that dollar and get the euros in return. Okay, you don't know who, someone in the world. So our transactions, they just go through the interbank web network or to the liquidity providers, and they know how to do that. Okay, they might sell to other banks or to companies or whatever it is. That's falling 1 2 2 continue for the price move someone. Yeah, but it's not like this is one trade. It's not like the whole movement is made of one trade. Okay, every tick, it's a transaction. Okay, so if you go to the tick and we go to the 1 minute chart, every one of these ticks you see here is a transaction. So every practically every second there's someone transactioning euros and dollars, and that forms in a large scale that you mentioned, Joe, what we see as a trend. Okay, but it's actually a series of millions of transactions, tiny transactions. Okay, if this was this is a netting account. If this was a hedging account, I would like to keep this trade open and start building some buys. Hope I'm not. Let's see if we can, because now this is a little bit overextended, this movement down, and I will try to catch the next movement towards the next movement down. Okay, so let's see if I can catch the next movement low. So when I bought larger than my, okay, you can see this transaction. So I was short 0.15, but I bought 0.2, so I closed that, and now I am buying the other side. And now let's see, we can push a little bit higher, and then I will switch again to the short side, just because this movement here was a bit overextended. So I'm trying to catch the next movement, the next leg higher. I wanted this to be 0.2. Okay, that was my bad. I thought it would close and add and open a 0.2, and it just opened a 0.05, which is kind of not what I meant. So let's wait and see a little bit. Okay, I intended to close and open a 0.2. I just close and open at 0.05, which makes sense, but not what I meant to do. So yeah, so Malik, I just wanted to catch this next movement. So maybe my swing trade, this, maybe my little swing trade might go all the way to the lows, but in the meantime, I wanted to do some scalping also to the upside, and that's what I wanted to do. So yeah, Malik, the FOMC might be finally what it causes the break of this range. Okay, hard to tell which direction is going to break, if they keep saying they're going to raise interest rates, so we might see a push lower, and a retest of the lows. If they say they might hold on increasing interest rates, we will see this flying up. So now let's wait for another setup, for a new setup. I need to wait for a little bit more information. So it could actually someone in it for euros. More response. Okay, so it can be the same people getting in and out. Yeah, it might be the same people, but usually large transactions, they need to position themselves. They build positions in the market, so they don't go as we do as retail traders. They don't go in and out as quickly, you know, from the market. They need to push huge amount of money through the market, and that's actually what moves, you know, the market, those large movements. So they don't have the ability, you know, the capability to go in and out that quickly. So they build positions, what they need. Okay, if they need to hedge themselves, if they need to balance book, you know, in case of banks, so banks need to be balanced all the time to not be overexposed on any currency. So they buy and sell currencies to always be kind of flat. So it's hard to tell who is moving the market, but it's, you know, large institutions. It's not us. And I expect the market to react to the consumer confidence news in 45 minutes. Yeah, usually the US news, like the consumer confidence, they tend to bring volatility like this movement here. But they usually don't make something very, very, you know, trend changer to the markets. Okay, so now I'm trying to get a feel of the market. Where's the market going? So this might be a pullback to test the highs, and this might be a just movement to continue movement down. Okay, it's always hard to tell in real time what's going to happen, but you build models, correct? So if I want to trade the short side, I need to be expecting to short that area or to the pullback or at the top to a potentially double top and a reaction. I don't see a lot of power on this movement, so the market will pull back and retest the highs. I'm expecting a little bit more of down movement. Let's start shorting a little bit, and I'll add a little. If it goes up, I'll add a little bit more. So this specific setup breaks down at the break of those lows. at the breaks of those lows, I need to decide if I close the trade or I try to fix the trade, and it all depends on how the price gets that area, with how, you know, how's the momentum behind it, and a lot of factors. But I will need to accept this short trade was, you know, a losing trade if we break that area. So I'll not be holding more than that. Okay, so it's never the same. All depends on how large is the range of the pair I'm trading. So I'll try to give you an example. If I'm short right now, right there, my very next target, okay, if I short right now the market, my very next target needs to be there. Okay, because that's the scalp target, the retest of this support. So that's a scalp target. If I want to swing this trade, even though I'm on a 1 minute chart, my swing target might be the next key level, or the next key level, which is all this area down here. So if I'm scalping, I don't look for a fixed amount of pips, because it always changes. Okay, if this goes a little bit higher, my target is still down here. So in this case, it is 2 pips. But if it goes a little bit higher and I go short, my target is still down here. So that would be a, I don't know, a 4 pip target. Okay, so I look for areas, for key levels, and those are my entry areas and my target areas. Hope that makes sense. So it's a lot of indecisions. Market is not, it's struggling to push high, but it's also not pushing down. So let's see if we can have the movement. So I have a target. I have a mental target there. That's my scalp target. Depending on how market goes to that area, I'll decide if I take profits, or I scale out, or I do nothing, and then it's worth waiting for the next key level to come. Yeah, Joe, you're right. And on the hourlies, we're still in that range. On the hourlies makes sense to give it a try. Okay, to say, okay, I'm long. My stops need to be well, if I believe this is going to respect the range, yeah, then yes, you can go long. You can place your stop loss there, and your target in that area. Valid, completely valid, and actually that might be a scenario. Okay, so it's just what time frame are you analyzing, and what you want to accomplish, because that would be a setup that will take longer to evolve. So if I just want to go to lower time frames, then I look for a pattern on the lower time frame that I'm trading right now. Okay, now look what happened now. Okay, this was the attempt to go lower, okay, to go to the targets, and that failed to happen. So now I need to be ready for the market to continue to give another push to the high side. Now look how we're forming this movement up. Okay, we're forming like a little channel. So there's a lot of balance, a lot of indecision of whether we're going to the upside or to the downside. It's something I don't really like. I don't like. I'm not. No, I'm never confident on this kind of movements, because you think you're finally going to one direction and then we go back into the channel. Okay, so if this follows through a little bit, we'll be on the target area for the scalping target. And now I get new information. So new information, gives me, either increases my confidence in the pattern and my trade and my setup, or decreases my confidence in the setup. So what I was looking for was like a little pullback, okay, from this movement down, a pullback, and then a continuation lower, or at least a test of the lows. Instead of that, we turn into a sideways market. You can see we're stuck in that range. So that decreases my confidence in the setup. So I'm in a small position. If I was in a large position, I would look for ways to decrease my exposure to this pattern, since we're not doing what I thought we would do. On the 5-minute charts, we had a pullback, and potentially we might retest the lows, so that's also information to take into account. So I might try to fix this short entry. So I'll see how price behaves, and I'll try to fix it. Yeah, Joe. So if you're long based on the hourlies, great setup. I think. Just not sure. I guess this tail there reacted to the top of that demand area. We might see push, but we also had this very large movement down. That's so. As I said, we might go up, but on the way up, we should have some, pullbacks, and I can try to take advantage of those ones. Okay, now you see how we're just exploding to the upside. Okay, so I now need to, okay, this was an area where I was expecting a little bit of resistance. It's just breaking up. Okay, so I need to admit and recognize this setup might fail. Okay, and there's no point in holding that for longer. Okay, so I need to wait. I can either scale out of the trade. Okay, I will scale out a little bit. So my mental stop loss is right here. I'll see what I do once market reaches there. I just want to see how price behaves up there. To see what to do with the trade. Okay, but even now I recognize the trade was going against me. So you saw how I took partial losses. Okay, instead of waiting for the whole trade to go against me and take the full loss, I'm taking partial losses. My thoughts on flag and pole supply and demand. Yeah, so flag and poles are just formations or a way to read or picture supply and demand areas. So I trade same supply and demand areas: gear, gill, calls, flag and poles. So Did I get my training from Gil? No, I met Gil years after I already started trading. Okay, now guys, see how price approaches the area. Okay, it's very, very important, because if I'm going to try to fix this trade, I need to be mindful of how prices goes there. If it just goes straight up with a lot of power, I just need to close. But if it starts doing this, we might see a reaction to this area, and I might have the opportunity to actually fix the trade. Okay. Okay, now this might be a key support. So from here we might react to the lows, to the upside. So I need to be careful with that. We're going to react to this demand and push higher. So as we get to break even, I need to scale out of the trade. I'm just trying to fix it right now. That's the potential reaction area. So this is key. Are we going to follow through, or are we going to react to the upside? Key moment now. Okay, as I get to break even, I scale out a little bit. This specific trade was a $16 loss. So I'm trying to mitigate the loss. Okay, so that was a fixing technique. Okay, all I did, I fixed this trade. Let's see how what. Okay, that was a $6 loss. So just trying to understand, understand what happened. So I was looking for this pullback right here to continue lower. Okay, now that didn't happen, and I looked for ways to fix the trade. Okay, my purpose on that little setup was not to make money of the setup, but to mitigate the loss. So what I did was, let me show that. Okay, what I did was first to scale out. Okay, at this very moment, let me show you that. At that moment, I see a lot of momentum against me. So I just want to take part of the loss off. Okay, I don't want to take full loss, so I take partial losses. I didn't know market will go back down, correct? I didn't know that. That's something I knew afterwards. Then I keep reading price and I see some, struggle, and what it seems to be a reaction to this resistance area. So then I added again. Okay, the partial loss I took put it again into the trade to get a better average price or break-even price. And as I got to break-even, I took off a little bit out of the trade. Okay, I hope that makes sense. So it is a loss, but it's a very small loss. So that's the whole idea when you're scalping and when you're scaling in and scaling out of your trades, to make sure you're well positioned on every trade. Now, of course, once you recognize you're in a strong area, you do want to go a little bit heavy to actually make money. But sometimes your objective is not to make money, is to fix, or is to to go back to break even, or to recover an account, or there's different purposes. Okay, so let's move on. So yeah, these are CFDs, institutional traders that are actually moving money, and we see those reactions. The CFD mimics the movement of the currencies. So institutional traders, it's a large word. I did a webinar. Not sure if it's on the YouTube channel, but there's a lot of institutions, and each of those institutional traders have different objectives. So many of those are only transactional traders. Okay, they just they need to get the money, so they sell the euros and buy the US dollars, and they do an actual transaction, of course, not a CFD transaction. Okay, let's see if we have opportunity for a new setup. Pushing this level, we might see a little break. Stick to the shorts. Let's see if we can get a break of these levels. We're pushing to this support, but we are creating lower highs here on the top. So if we keep pushing the support, there might be an attempt to break it. So as long as we don't create a higher high, okay, as long as we don't break that one, the setup I'm looking for is valid. So let's see if we can break it. It's again, because of this volatility here, it's hard to tell where's the limit of the area of the support. But let's see if we can make it. And then on the 5-minute chart, we had a pullback, and we have the attempt to go higher, but we fail on moving that direction. So we might either go just moving sideways, or we might actually see a break to the low side. Let's see what happens. Yeah, Joe, that's a great example. Okay, when an American company needs to sell USD to get Japanese yens to buy Japanese products or services, you see that movement on the USD JPY. That's exactly okay. They are, because they don't. How do they make that transaction? Through the banks, okay, through the bank system, and then the bank system will make that transaction, and you will see that reflected here. Okay, that's the idea. Buyers are persistent, huh? Just not letting go. So now my setup, you see, my setup failed again. Okay, we're breaking the what I thought it would happen. I need to fix this again. So a lot of our work, our job as traders is actually picturing different scenarios and having plans for different scenarios. Okay, so of course there's the macro. Okay, there's the macro picture. So we're still in the range. So nothing concerning still, but the breakdown didn't come. Okay, so my reading failed. Okay, you know, our setups are right 50% of the time, 60% of the time. The rest of the time we either take losses or we fix. So I try to fix my trades. So my target is a tricky question, because first, right now I need to fix this entry. Okay, if we're in a range and I sold at the very bottom. So right now for this trade, I need to just fix it. So I can either just take the loss, or if I fix it, then I'll try to close for break even. In the case the break does come, okay, and does happen, then my target needs to be either that area right there or to the lows. Okay, but right now I'm not seeing. I just need to fix this trade. Okay, my stop loss is here. Okay, that's my mental stop. So again, I want to watch how price goes towards my stop, because if it goes in a straight line, then I will take the loss. If it starts compressing towards my channel, then I have the opportunity towards my stop loss area. Then I have the opportunity to fix it. Okay, then I will add into the trade and I'll try to fix the trade. So again, on this pullback, I took a partial loss. Okay, so now if this goes straight up to my target, my stop loss will be smaller than it was it would initially would been. So for this setup, again, I took a $5 loss. I'm now $6. Okay, so I fixed it. Right now, that's fixed. So now I want to see if I can get profitable instead of just fixing the trade, okay? With that, it should be fixed, okay? See the trade? Now let's see if we can make a little bit of money. Now I'm showing you this with very small positions. I haven't got the opportunity to add into the trade and really build because I don't have very clear setups. But we finally are breaking the range, and let's see how far this drops. Okay, now my stop loss, it is clearly there, but I need to be prepared for the market to retrace before it continues lower. Okay, so I don't want to trail it right now. I want to see if there's some follow through here. And now on the 1 minute chart, if I get some follow through after this candle, okay, I expect some support there. Okay, so at that point, I expect something like that. And in that pullback, I will add into my shorts to get a better position in case this goes to the lows, okay? But again, I will keep reading how price behaves. That's key, guys. You have written an article or blog post about your methods. If not, do you have some resource to recommend? Keep coming to the training rooms. I'll try to speak out loud everything I see and everything I read is it really is a mix of a lot of things happening together. So price action, patterns, price behavior, price context, money management. So there's no one resource to put everything together, but okay. Do you see the reaction? Do you see how we touched the support line? We reacted. Now let's see if we can get some follow through. If we break that level, we should see ourselves around that area, and that's a nice, and that would be a nice profit area right there. Again, for targets, you know, for setups, I'm taking on the 1 minute chart. Of course, if I was taking setups from larger time frames, maybe this would make sense to try to, you know, swing it all the way on the dailies, okay, to the lows. But I'm just scalping the 1 minute chart, so I will usually go with larger volumes, and we'll look for lower time targets. Yeah, the base is supply and demand. The supply and demand is the areas where you want to be active, but then you want to make sure if you're watching Gil's videos, there's a lot there. Okay, compressions. What you will not see on Gil's videos is the trading part. Okay, is the analysis part. You will see the analysis part, but you will not see the trading part. So you want to make sure you identify and you see how the price reaches those supply and demand areas. So that's the base, supply and demand. You can distinguish between supply and demand and support and resistance with your eyes, and then seeing how price approaches those areas, and then of course all the money management and trade management afterwards. Okay, I saw this reaction. This might be a reaction to the demand area. That might be the top part of the demand area. So that's a good target area. We might see the pullback right now, and then a new opportunity to sell again. So, but for the trade that started in a drawdown, it was a nice recovery. So overall, guys, that's 2 winning trades, 1 losing trade, and the winning trades are both larger than the losing trade. So that's a good scenario. Correct. Now, use different lot size, and you just multiply this by 10, 100, whatever it is. Okay, you just keep these ratios with larger amounts of money. Yeah, but that's the whole idea when you're scalping. Okay, guys, I think we'll wrap up. I didn't have the opportunity, or maybe I missed it, to to go you know with larger lot sizes, which I than today. But at least we saw the process. Okay, we saw the reading, the analysis. You saw me fixing trades. You saw me scaling out of trades and taking losses and taking wins and making sure you're balanced and in control. So I think that's a good lesson for today. Okay, guys, with that, I think we'll wrap up. I'm not a huge fan of being active on news, so I will not, if there was no news at 5, I will be shorting this. Right now, I'll be shorting, but I just don't want to be in a trade as the news come, okay? Because that messes all my analysis and my trade. But thanks for coming, guys, and thanks for staying. I'll see you next time. Bye-bye.